Let's get more on the markets from Matt Kacur, president of FSA Valuation Service. Great to see you once again.
Thanks for having me.
What are your thoughts? I mean, I know, where do we begin?
And I it's still sorting this out myself. I think we're still in the fog. We're not really sure. I have some ideas, but this is going to change, and it's been changing literally probably since I walked in the studio from downtown. So, but happy to try and give you my best ideas.
We get a few money managers coming on saying you shouldn't change your portfolio, you should ride it out. But is that a bit glib, do you think?
Well, far be it for me to criticize someone else's portfolio,
okay, yeah.
But I do think you have to have a core. So I will 100% agree with that, and you should not be changing that core. It's really on the margin that we do, at least. So we kind of added to some golds recently, some more stable ones, so some consumer staples, but this is really on the margin. So I would agree in the sense that, yeah, you got to have that core, and you don't need to be, wild swings in your portfolio. But definitely for us, we do on the margin.
The gold you're happy about, let's have a look at gold. It's trading near to last week's record highs. What's your favorite way to play gold? Do you look for leverage with smaller gold companies, for example, or do you stick to the big names?
Actually, a little bit of both. So I kind of have three ideas in that area right now. And if you want the big brand name, the highest quality, the one that, you won't get in trouble as much, I'd say Agnico Eagle. I think that's the one you do over some of the other big names.
AEM, yep.
Yeah. And then if you want to go down market a little bit, around I think it's $10 billion market cap, if I'm correct, is Lundin Gold. In our work, at least.
LUG, yeah.
LUG, yes. In our work, that has one of the best profiles for a gold company. Some gold companies, it's hard to get a return on capital, especially if they're kind of early stages. So we kind of don't fool around in that area. We don't mess with that. We kind of wait for the cash flow to be coming in, and we just see a lot of cash flow with that company. And then lastly, Aura Minerals. So
ORA, yes.
Carry on. That's a smaller cap. Really great profile in our work as well. But just because it's smaller cap, it's probably a bit more risky.
Okay, and Aura, just remind us, ORA, where are they active? Where is their main project?
I think it's mostly South America.
Okay. Give us some of your ideas in consumer staples. Obviously, supermarkets, grocers leap to mind there.
Yeah, so my favorite is Metro. I like all of the Canadian ones, by the way. I think Loblaw's Empire are really good. But my favorite would be Metro. It seems to have a higher return on capital. I like the consistency a bit more. I did a little bit of research on where they source. The CEO, I think it was the CEO, said they only source about 10% of their product from the U.S., which surprised.
Very low, yeah.
It really did surprise me, too. Because you think of all the product when you go in there and you see a lot of American brands. But, so I was pleased to hear that, a little surprised as well.
Do you think all the produce at certain times of the year from the United States, there'll be more? Yeah.
I think they have some flexibility, though, too. I don't want to pretend to be an expert in groceries. We look at the numbers, the financial statements more than anything else. But, they can get more from Mexico, or, they can mix their product where they get things from. And even probably some of the American brands, again, not an expert, they might make it in Canada anyway.
Yeah. What about the big tech names on the NASDAQ? Are any that are attracting you right now? Do you think any of them are looking unduly cheap?
They're certainly looking cheap, but you got to remember they are higher beta. So if you want to kind of protect against downside, you don't go to tech. It's just the way it is. Again, you're going to have a core. You're going to have a lot of good names. So one of our favorites is Broadcom. I think that's a really good one, AVGO. If you're trying to look that one up. Yeah. NVIDIA is a great example. That there's no way we're backing off NVIDIA. However, it is a higher beta. It might be one if you've done well with it, you may trim it a little bit in this kind of volatile market. But don't give up on it altogether. Please, have some of it, because it's such a good company and it's got a lot of, great future ahead of it.
They do have that lock on those high-power chips right now, it seems.
Yeah, it doesn't seem like there's a a genuine competitor. Of course, they're all working on it, and they're
Right.
going to get there. But they're just far and away the best at this point.
Have you? Do you use AI much in your work? Have you?
Well,
had
we're starting
opportunity?
to. We do license our software to some of our guys, but we do not have a genuine AI platform within our stuff. But we're starting to use the other tools that are out there. So Copilot, I love Copilot right now. I try and find
Microsoft.
out. Yeah, the Microsoft one. Try and find out who's tariffs could actually benefit them. I don't find a lot that it actually benefits, but at least they don't get killed by it.
Yeah. Mm-hmm.
And that's a great tool to help you do that.
Yeah.
Because I don't have a screen for who does well under tariffs. That just doesn't have a filter for that. So you got to go one by one, and it's a bit of an exercise, but that tool really helped me kind of understand that.
I find it can be good for screening, and then of course you have to check what it tells you, but it can be good for giving you ideas.
Indeed,
AI.
yeah, it's great. It's great. I love it.
What about the pipelines? We know there's a big push on now for Canada to find other markets for our energy. In particular, Pembina Pipelines is a name that attracts you.
So I really like Pembina. I've always liked it. We've owned it actually just after the pandemic, kind of when things started going again, all the way through, and then we've added to it because we want some stability here. So we're looking for the more consistent, nice dividend, and then of course you got potential growth to try and open up these new markets. Now, of course, it takes a long time to build that kind of infrastructure, but they should be at least, full capacity as they're trying to get out to Asia.
Another name is partly, it's mostly now utilities, midstream, and power, AltaGas.
Yeah. So that one's a little different. It doesn't have quite as strong a profile in our work, the return on capital profile, the cash flow, but it's good. And they've also kind of reinvented themselves in 2018, focused on their core, and I think that really changed the company. And now, it's a kind of a new one for us. I haven't owned it for all that long, but I did like it with all these tariffs coming in and the prospects for opening up Asia. And I thought, that's probably one that makes a lot of sense, and it has a pretty good profile anyways.
Matt, thanks very much.